2000s. Even oil is in the green, which is kind of like amazing. The only thing not in the green right now is actually gold. But yeah, new day, making new all-time highs. I'm just gonna quickly go through, I guess, like my current portfolio, what I own. Yeah, kind of just like a new update. So actually, right now I am up about 39, close to 9% year to date. Yesterday I actually got burned on the Chinese, I guess, like Chinese trade. I'm not really like, again, when I bought those like companies, it was more like a long-term play. It wasn't like really like going through the short term. So you can see I have like Pondudo, Futsu, and then Tencent. I'm down about like in total about like $150. Yeah, about $150. I'm not really like nothing mad about it. Again, like it's really cheap if I look at the fundamentals. If I look at my, I guess, like my screener and then my different analysis, it's pretty great. Again, I'm not gonna go through again like Pondudo and then Tencent or like why I bought. Like you can look at the second episode to kind of like go through why I decided to buy those three companies among multiple Chinese companies. But I'm not really worried about it. I know that like it's kind of like I know it's risky to invest in China at this point. That's why like my position kind of like showed. My only biggest position is actually uh, Pondudo, because again they have like this like Timo component that is kind of like go outside of China. But beside that, Tencent and like Futu again, it's like $2,000 and then $3,000. Relatively to my other position, it's not that high. And again, I'm kind of like really concentrated. So, but yeah, that's kind of like quick update on my position. Going more about it, FICO and Nvidia are actually the winners. Yeah, so FICO has been really like a tremendous holdings. I bought it about I think I bought it. It's been a year now, and I'm already up about like 73%. Yeah, FICO has definitely been like tremendous holding. I've been thinking a lot of time about like selling FICO, because if I go to the fundamentals, FICO is trading at about like 100p. I thought about like, a couple of times to sell, to just like take the profit off the table and stuff, but just keep holding it. Frankly, I think I'm just gonna I think I'm just gonna hold it and just keep it at this point. And another one has been really great for the last 5 days is Nvidia. As you can see, I've been kind of like trimming down my Nvidia positions whenever I get a chance. So whenever it is above like above $120, I've been trimming. So right now I have about like $28,000, but I believe I own about like 260,000, like 211 shares. I used to own before I used to own about like maybe like 360. I guess like close to 350 shares of Nvidia. I've been really like offloading my positions since like end of August, beginning of September. I've just been unloading my positions, just kind of like rebalancing it into like other sectors. Again, I kind of like sold some of my took some gains to buy FICO, no, to buy a fix, to buy a Emir, which is both industrials. I also took my gain to buy more Meta. When Meta had a dip, I kind of like took some of my profit there to buy more Meta. I also buy more Google. I also kind of like, again, even my CrowdStrike position is mostly for my gains from Nvidia. So I've been kind of like selling my Nvidia shares recently to just like buy all the stocks, buy all the companies. Again, like I wasn't really like feeling bad to be, because again, before this I had about like 30% of my portfolio in Nvidia. It just came like that. Again, when I started investing, it wasn't like that. So Nvidia just grew up so fast, so quickly, that it just became, at some point it was like 40% of my portfolio. I've been kind of like trimming it down. Even like yesterday, I sold some share. I sold me like yesterday. I sold maybe like 20 shares of Nvidia again. Like yesterday, no, actually it was Monday. I sold like 20 shares on Monday. So yeah, at this one I probably made about like, I made a lot of, again, you can see like my normality gain is like 110%. I made a lot of like a lot of money on Nvidia. So I'm not really mad about it going up. If it goes up again, I'm still quite into that. I have like more like about like $20,000 in that. I'm not really worried about it. Something I'm definitely looking to buy more is Pondudo. So I actually bought more of this on Tuesday. Actually, yeah, yesterday I bought more of this yesterday. I'm definitely looking to buy more. Whenever I would see the deal, I'm definitely looking to buy more. I'm not really going to go much about like the Chinese trade, what I'm doing for the Chinese trade. Again, I don't really look at the trade. I just look at that's doing like stimulus, and I just want to be part of that, because again, the Chinese economy has been slowing down for multiple reasons. Like people have this perspective of the Chinese economy being, I guess like opposite. People have like a really, not the bad view, but people have like a different view about the Chinese economy. I still feel like China, India, mainly China and India are definitely going to grow faster than the US in the future, and that's why I want to be in those positions again. Like I'm not going to go why I bought those three companies, Chinese companies. You can go through my like the episode 2 to kind of like just like go through that. So the next thing I will be doing is just again I went through quickly about like portfolio updates. Something else I want to talk about really quick is Google. So there was a news about Yeah, so there was a news about like Google case ruling. Basically, like people wanted like just like the DoD want to like the DoD want to break up Google into multiple pieces. So I guess in this type of situation, it's really hard to analyze it as an investor and a shareholder of Google, because again, I love it when like the DoD and like all investors recognize like Google is a monopoly. Again, like you want to invest in monopolies. You don't want to invest in like companies that have to compete for like every dime in the market. You want to invest in monopolies. So the fact that like people are like, kind of like realizing that Google is indeed a monopoly, it means that it's actually good. But then you got to look at the flip side of it, like different regulations. I definitely feel like even the saying about advertisement is kind of like overdone. Again, even for advertisement, you have a bunch of other companies such as like Amazon, Facebook, a bunch of other companies, Spotify, that are doing like advertisement. Even regarding search, like again, search is basically like me typing into a search bar. This is already searching. So just me typing it over here is already searching. So it's like, how can you be saying that Google has like 95% of the market if like I can search stuff on Amazon, I can search stuff on YouTube, I can search stuff on right now I'm using Bing, I can search on ChatGPT and stuff like that. So I feel that case doesn't really like, there's definitely like some truth to it, but there's also definitely a lot of like stuff that kind of just like being overdone. So there was like being breakup. There was the other point was also kind of like breaking up the Android app. So basically like be able to like upload, basically like Google had to like open Android, basically be able to like add not just the Google store but like all the stores to the Android app. That's also something I kind of felt that again for even for that I definitely recognize that it would be nice, for like the competition to have like different like opportunities to be able to like place different products. But again, there's also like a cybersecurity problem. Is like, let's say now you have like a user who is able to download stuff from online without actually going through the Android app. The Android app is like whenever an app is being published on Google Play, for example, right? Google has to like approve that app, make sure that the code source is correct. But now if you basically let people kind of like download apps from like third parties, that is basically like building a lot of like vulnerability on the operation system side and a lot of like other stuff. So I definitely see the plus and the con in that side. But again, I feel like doing that, you just cannot just be like, all right, we're just gonna be able to like we're gonna let all the users be able to like download apps from like third party stuff. That won't be like, I don't think that should be happening, because again that's a lot of like security concern in that like position. So that was like the first thing I wanted to go about, again, like the Google breakup. The other thing I definitely want to go about quickly is kind of just like looking at new opportunities in the market. So I'm going to quickly go into my screen right there. So I kind of like ran this before to get my investment universe is like Russell 1000, and then you have like the top 10 stocks. So among the top 10 stocks, I own about 3 of them. So Nvidia, which I own right here, Fix, and Tech, which is like a less known shoe company, pretty good shoe company. And then they're behind like Hoka and the Ux brand, if you guys know about that. But I just want to go through like a little bit more about like just like going through opportunities in the market, what we can buy, what we can look forward to. Yeah, so again, like first of all you have like those top 10 stock here. So I have like Anet, which is on my watch list. Again, like I'm kind of, whenever I look at this, I'm still kind of like mad about it, because I started kind of like doing research on this stock, on this company, like in beginning of August, I believe, and since then it has just been like 9% up. Yeah, it was even before that. It was like beginning of maybe like August 5th or August 6th. That's kind of like when I started doing my research on this stock, and then I just kind of like be going like 9% up in like 3 months. And then that's one of the stuff I've been looking at recently. Another one I've been looking at is this one, Axon. Same, like this one is really I'm actually even mad about this one, because this one had a big downturn. When I say like the tree, yeah, like I'm so pissed about this one, because like this one I started looking at it maybe, when was that? I started looking at it around like maybe like right here though, like around this position. And when I started looking at it, like the P was like super high. Even though like my screener told me to buy it, I didn't really buy it, because I just felt like I just felt like the fundamental was good, but I just felt like it was quite expensive, right? Like the P was like quite high, and I was like, yeah, I'm not really sure I want to really like, get into that. So now 3 months later, it's up like 42%, which is just like yeah. So I want to see actually where it ranks now. Yeah, FICO is another one. FICO is 664 is still a buy, but again, like the fundamental doesn't look as much. It doesn't look too good at this point in time. Earning growth has been kind of like, it's negative now. Yeah, FICO is definitely like an expensive company. I wouldn't buy it now. That's why it's really like, because like when you look at the score, it's like it's a 64 score. It's kind of like really like, at the margin right there. But let me just go through quickly. I want to look through Axon. Yeah, this is Axon. Yeah, kind of like went through, because again, it just became so best. Yeah, right now it's like it's 63. Back then it was about, back then when I was doing the research originally, it was about my score I had was about like, I would say it was like 79. So again, like it went up big, like 42%. Like, yeah, like the revenue growth is like, just like the earning growth is just amazing. Like the earnings are growing faster than the revenue, which is like, usually you definitely want to see that in a company. You definitely want to see that. Nvidia, yeah, Nvidia is still on the top. 83 still a buy. You got like some AI feedback analysis. I'm quickly gonna go through like the Chinese ADI and see like if anything changed. It's gonna be quick. Yeah, so actually like some stuff move around. So again, PDD, we just like, again, I own that PDD. You have like Futu, and then Tencent actually dropped out of the top 10. So now you have Baidu. Yeah, like Chinese area, like the score is not that great. You can see like the only buy here is like PDD. That's why I kind of like, bought a lot of it. And then hold, like Futu is kind of like hold right now. The rest is not really great at this point. And you have NetEase really went down actually. But if I look at 10, what is Tencent? Yeah, Tencent, what is the score? Is that like 40, 39? Yeah, Tencent actually went down. So it's telling me to sell. But again, like the fundamentals looks pretty good for Tencent. If I go through maybe like the risk analysis for Tencent, I don't know why I always forget the ticker for that. TCHY. Alright, so kind of like the risk communication service internet. Yeah. So analyst coverage, yeah, based on like the analyst recommendation, this is strong buy, and then average price is target high price 58. Median is, yeah, it's pretty much kind of like all close together. Yeah, the volatility is quite high. Even like the Viking is quite risky. When you look at the different risk matrix, it's quite a risky stock. And then the beta is low, so I guess it doesn't really follow the market. The Sharp ratio is not great. And then correlation with the market, again, it doesn't really follow the market. And then you have like the different risk box plot return for Tencent. Let me quickly look at PDD. Yeah, actually, in the meantime, just like, if you guys have like some specific thing I should cover, or like, if you guys want me to do like more detailed analysis, I can definitely like kind of like do it. But I like to do more like, data driven analysis. I don't really like to go that much in detail with like, going through like, financial statement and stuff. I just like to like kind of like have a process where everything is basically be done like automatically. That's kind of like, how I like to roll. Yeah, like PDD is definitely like on the value. Like, yeah, like if you look at the, it's just based on like the analyst price target. So PDD right now is trading at 141. The median price is 162. The mean is like 165. So you have about like $23 of gain that you can get, just like, and then target high is, yeah, again, like you have a lot of margin there. Again, you gotta realize it's like it's a quite a risky stock. I want to just like make that quite clear. It's quite risky. And then you can look at like the Sharp ratio is better than Tencent, but the recovery time, you can see like it basically like never recovered since like 2020. It has never been able to recover to like all-time highs. And then correlation with the market, again, it doesn't really follow the S&P 500. So if you want it, like, it's also like a good way to hedge. Like if you want to hedge your position, hedge your bet, because again, like if you look at most like US companies, like if I look at maybe like Apple, for example, they mostly like follow the market, right? So you can see like correlation with the market is quite high. So usually like 80% of the time, if the S&P 500 goes up, Apple is going up, or if like S&P 500 is going down, Apple is also going down like 80% of the time. But if you want to have like asymmetric bet, maybe look at like different way to hedge without doing like any like options and stuff. You can definitely look at international markets. So again, like PDD is one of the stuff you could look like. So kind of like, again, hedge your risk in the US, on the US market. I've been reading this book. Oh my god, I'm forgetting the title. Oh, how can I forget the title? I've been reading a book. I'm forgetting, like, the title just kind of like going out of my head right now. How can I forget the market? I'm definitely forgetting the title right there, but it's definitely gonna come back. But yeah, so what I mean is that like if you want to like hedge your position and just find a better way to like diversify, you can definitely look at international, get like international exposure. That's definitely like a great way to like diversify away from stuff. Yeah, I used to actually, yeah, Costco is definitely, yeah, Costco is kind of like a similar situation, right? I used to like own Costco, and then I sold it, like took gains off the table because I felt like, it was kind of like I felt like it was just getting like kind of like really expensive. That's why I just kind of like took the gains off the table. Yeah, this is Costco consumer defensive, analyst coverage. Yeah, like the target mean price is like quite short ratio. It's okay. Again, it's another one that's like really like correlated to the market. The alpha is also good, but I just like took profit off the table. I'm just like quickly looking at I don't know why how. Oh, all right, yeah, I remember it now. I've been reading this book called The Random Walk on Wall Street. I'm kind of like on the final chapter now. So there was a chapter about like diversification, how to diversify your assets, how to like hedge your risk, I guess. And they were talking about like looking into the international market, because usually like when most of the time when S&P 500 is down, you can find like other markets where like they actually like the equivalent of S&P 500 in that market is actually up. To be able to kind of like look at international markets, it doesn't have to be China. It can be India. You can just like buy maybe like, again, when I'm going to, oh wow, I'm actually surprised. Like correlation here is actually extremely high. But this is like the India ETF. I'm actually quite surprised. I would have thought that the correlation here would not be as high as it is, but I guess I was wrong. But again, you always need to find like to kind of like hedge your risk and reduce the volatility, and also like increase. I guess it works on both ways, right? So like if you want to have like a return similar to the market, just buy like basically just buy assets with like a high correlation with the market. But if you want to have like different returns on the market, you gotta have like stocks that have like a lower correlation with the market. That's kind of like a way to outperform or like to underperform actually, because again it works both ways. It's also really depends on like how comfortable you are and how good you are with your analysis and whatever process like you use basically. So I think I'm actually gonna stop the video right here. Thank you for this episode. Yeah, just again, like if you have like anything to add, anything you guys want me to cover, just add it to the comments. I'll take a look and yeah, and do some like analysis about it. Maybe like add different screeners, add different stocks, make this better. So this is like the public version I have right here. So some features are not working. So for example, like new sentiment is not